Hello traders, in today's market update video, we're going to be looking at quantifying tops and bottoms. And in quantifying tops and bottoms, what we are specifically going to be looking at is what is a top and bottom, why is it important to quantify them, and finally, how to use those tops and bottoms to achieve consistent performance in your trading. Hi traders, thank you for joining the Master the Markets team today and supporting us in our mission to spread the truth of trading and help you achieve consistent performance. It's Thiru Napan here, founder of Master the Markets, Illustrates Conference and the Traders Open Day. Alright, let's dive into the topic for today, which is quantifying tops and bottoms. Let's take a look at this. So as I was saying, what is a top and a bottom? Okay. To first explain that, so let me just go into here and then we'll go back into in real time. Imagine now you've got a top to bottom move, just like here. Okay, so let me just draw it out, annotate for you. Let's say it comes all the way down at some point that is confirmed over here, and it comes all the way down, and then eventually it then stops over here. Okay, and then it starts to show some kind of buying pressure coming up. Now you see, if I want to talk it from here, as you and I know, the market alternates between a top and a bottom. But what would you say a bottom is or a top is? How do you quantify it? This has been a question for me on my trading journey for about 3-4 years. I just couldn't find anyone who could give specific formulas until we met the institutional quant traders. Okay, so let's take a look at this today. So how do I quantify a true bottom then? You see, let's say for this purpose of this scenario and this topic over here, we just say we program a very simple formula. As of now, in this move, this is the lowest point, okay? The lowest point, isn't it? So that is the only one that could become a potential bottom if the market keeps going up after that point, yeah? So let's say it hasn't done that yet, and you put a very simple formula saying that I would consider something as a bottom if it moves a distance of 100 points, okay, or 100 pips, let's say, okay. That's your small criteria. So let's say the level here of the bottom of this bar, or in this case, the level of this bar here, let's say it's $1 and 1.50000, okay, 150. And if I were to say 100 points, 100 pips from here, especially in a currency world, plus 100, that will be 1.5100, okay? Basically, in other words, all I'm saying is from the bottom here, if it moves 100 points, and let's say 100 points is this level here, I would consider that a bottom, okay? If it moves 100 points. Basically, to quantify this bottom, I'm now using a distance parameter. A distance parameter. Okay? Right. Now then, since I've used a distance parameter here, until and when the next bars go to that target point of the 100 points, which is over here, I cannot call this a bottom. That means, let's see, this happens, right? It goes up, it comes down, goes up. It still hasn't hit the 100 points yet. It comes down. Finally, it goes up, hits it. Now, that is the bar that confirms this bottom. Okay? And that's when the arrow comes and the confirmation dot comes, saying that this is the bar that fulfilled the formula of the bottom being 100 points according to our quantification. Now, some of you might say, okay, Tiru, but it's already traveled this far, or we're only saying in hindsight that's the bottom. Yes, this is all fair enough. The real point is really when how you make consistent performance, consistent money is that after this quantification, whatever you have done, this can be 100 points, 150, it can be distance plus time, or any other criteria that you want to do, distance plus days, I don't know. But it can be so many. But whatever it is, whatever you quantified the bottom to be, but after that bottom formula gets fulfilled, and you enter on that trade, let's say based on the signal, it must still have moved to carry on. That means, let's say you buy over here, it must still have moved left. If it doesn't have moved left on a consistent basis, you cannot make money consistently from it. Okay? That's the whole point. But before we come to that, the first step is quantifying your bottom and top. So that's one way, very simple way I've told you that you can look into quantifying bottoms and tops. Okay. Over here at Master the Markets, we use the Smart Money Indicator, which is taught to us by institutional quant traders, and therefore we have those algorithm formulas over here that gives us a really strong edge to trade the markets on to achieve our consistent performance. So for example here, if I put the Smart Money Indicator on, and if I put the criteria on there, and there you go, right? You got all the tops and bottoms now quantified, telling you at which point this bottom got confirmed by this bar. After this bar, if I were to take a signal, it must still have moved left, and that's how I can keep making consistent cash out of it. Okay, good. Now that is the what part of it. Now if you're enjoying this video and you want to learn more about the basics, terminologies, or advanced concepts, whatever, just go ahead and just smash that like icon. If you haven't joined our channel yet, click the subscribe button and hit the bell icon to get notifications immediately when we have more quality knowledge like this and live trading updates. For those of you who are unsure of any of the terminology or the concepts in this video, watch our Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers the basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginner and intermediate traders, all dedicated towards helping you achieve consistent performance. The second point that some of you may be asking, okay, Tiru, that's all good that we know what are tops and bottoms. Now, let's take a look at why they are important to define. Because you see, traders, once you have quantified your tops and bottoms, this will help you towards building sustainable, scalable, reproducible strategies that help you achieve consistent performance. Okay? So this is what it will start to help you towards once you quantify your tops and bottoms. Now also another thing is once you've quantified your tops and bottoms, very important thing that will help you towards your consistent performance is what we call the open equity tables. For example here, we got the open equity table on GBP USD on a daily time frame on terms of how much it will move, how much move will be left once I get a confirmation bar. Okay, once I get the confirmation bar, how much move is left. Based on that, I can design different strategies. So you can see over here that, for example, in cash in 4.0 70% open equity, we use a 25 pip target because 85% of the time it will get to the 25 pip mark. Okay. Then you can see if I want to design more longer term strategies towards hitting a more higher target, I can either choose 50 pips, it will get to 74% of the time, 75 is 68% of the time, 100 pips is 60% of the time. If I want to get to the 50% mark, that's 150 pips. That's how your first step of quantifying tops and bottoms really helps you towards achieving consistent performance, okay, and building sustainable, scalable, reproducible strategies. These are all the stuff that we talk about in Traders Basecamp package. All right. Cool. So now the third part is how do we use all of this data? You see, for example, it's quite clear now. Once I got the open equity table, which I just showed you, every time I get a confirmation bar, I will know that there's 25 pips left 84% of the time, and that's when I will get into the market, put a target, and then my stop loss will be accordingly towards when the opposite high gets confirmed. Okay, so that's what I will do. So just to recap on it, in terms of quantifying tops and bottoms, we went through what they are, which I showed you, and why they are important towards building sustainable, scalable, reproducible strategies. And then finally, we looked at how we can use that towards building sustainable, scalable, reproducible strategies. Basically, using the open equity table, whenever I get a confirmation, I will know 85% of the time I'll get 25 pips left, and therefore my target can be there, and my trade management can be accordingly. Okay. For more in-depth explanation of that, remember you can always look at our Trader Starter Pack video series, which is just over here. Let me just show that to you. You can put your name, email address, and number for live trading updates as well, and then click on that, and you can get the video just sent straight into your inbox. Okay. So let's take a look at the markets for today. Dollar Swiss on the hand, it's uptrend, still going strong. It took a long time to confirm its bottom. Still same, it's moved left to the upside. We're taking this on a position trade based on the weekly time frame as well. Now, dollar yen on the other hand, still more open equity to the upside as well. GBP USD, it's in a single market compression according to the weekly. And to the daily, more open equity to the downside traders. And euro dollar, say more open equity to the downside if it takes out this level over here. Aussie dollar, more open equity to the downside as well. GBP yen, more open equity to the upside if it takes out that high over there. Bitcoin, on the other hand, still remaining strong at 45,000. More open equity, just confirmed this, so a little bit more to the downside for the short term. Brent oil, more open equity, still I would say towards the downside if it takes out this level over here. Gold, on the other hand, as you can see, it's an uptrend, but I would say it more temporary to the downside before it starts to revert back up again in line with its trend. FTSE 100, you can see still uptrend, but you can see that if it does take out this level more to the downside, so we just got to take a look at those levels. First level here, second level there. If it doesn't, and if it confirms to the upside, then more open equity to the upside. Dow Jones, on the other hand, more open equity, diminishing to the downside, so I would be cautious on that one. S&P, again the same thing, be cautious on this as well. Silver, on the other hand, open equity diminishing to the upside, a bit more retracement to the downside. And finally, wheat, more open equity to the downside. So that's that on the market updates. In terms of our performance, let's take a look at that. In terms of our performance in the elite room, as you can see, a bit flat across these two strategies. CI 4.0 100 pips is minus 0.87% down. And in terms of the live trading room, CI 4.0 70% OE is on a healthy 1.30% up, and it just lost a little bit tiny 0.16% on 70% OE. So overall 1.24% up on the live trading room, down 0.87% on the elite room. Overall we are up 0.37% on across both the rooms. Okay. Alright traders, I guess that's pretty much that from me on this video, and as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.